Welcome to Gracefully Graying. We are very excited today to have our first brother and sister team, Lisa and Gary Scholnick. And we will start in with Lisa. Welcome, you two. We're thrilled to have you today.
Thank you very much.
Those of you who will be viewing this, like us, share us on YouTube and all of our social media, and let's begin. Lisa, let's start with you, and I will let you explain your company's name and what you do. Let's start with that.
Thank you. Thank you, Lori. My name is Lisa Scholnick, and I'm the principal of Lifetime Income Sales Associate, also known as Lisa Co. Lisa Co. is a boutique insurance brokerage firm located in Bingham Farms, Michigan. After graduating from the University of Michigan, I followed my mother, Sandy, and brother, Gary, into the insurance business. Sandy was the first female salesperson for Equitable Life in the Midwest. As a respected force in the industry, Sandy encouraged Gary and me to help others create security through strategically applied insurance. When I entered the business, I wanted to add to Sandy and Gary's businesses. There was one specialized area that neither one focused on. So I decided I wanted to learn and become an expert in the disability insurance field. I concentrated my early career on working in the disability departments of the nation's most prominent and respected insurance companies, learning the industry from the inside out. In addition, attending classes, completing health licenses and designations, and learning product design offered by different carriers helped me gain the knowledge I needed to succeed in the disability world. Once I gained the knowledge, I approached our mom to join her in business. She was my mentor, my confidant, partner, friend, and definitely my biggest supporter. She focused on working with women-owned businesses and closely held family businesses. I took a slightly different path. Since the beginning of my career, I've been working with the medical and dental professionals. I like helping people. Those in the medical and dental fields also like helping people. We had a common bond. Gary moved back to Detroit to help Sandy and I expand our family business. He added a dimension to our business that was needed. Gary and I have the same work ethic and work very closely together. We share a customer-focused philosophy in our respective specialties. We work hard and strive to provide personalized white glove service to our clients. We believe in the concepts and products that we sell and have successfully helped many families over the years.
Great. That is a wonderful family history. I have to ask you, what is it like working with your brother, first of all? And, obviously this is during COVID, so you're not maybe going into your office and seeing as many customers, but our clients, but what is it like working with your brother?
Excellent. Most of the time. There are times that we disagree, openly disagree, but we're always on the same page when we are dealing with our clients. We work hard and we strive to do the very best job that we can for our clients. Gary and I work around the clock. We do work 7 days a week. Whenever it's convenient for our clients to meet, that's when we meet, whether it's in the evenings, early in the mornings, on the weekends. Their schedules are our schedules. And there's very few people that have this work ethic. But Gary and I have it. We believe in the services that we provide, and we work very, very, very well with each other, and have for over 20 years now.
Right. So tell us what the focus of Lisa Co. is. Tell us what you do exactly.
I sell disability insurance. My expertise has been on educating, delivering, managing in-force coverages, and being a client advocate for successful claims payments for disability income contracts. As you know, there's lots of different insurance products in the marketplace. There's health insurance. Health insurance pays the provider, pays the hospital, pays the doctor, but it doesn't pay you. Car insurance pays for the repair shop for your car to be repaired, but it doesn't pay you. Homeowners insurance pays the contractor to repair your home, but it doesn't pay you. Term insurance, like term life insurance, pays your beneficiary, but again, it doesn't pay you. Disability insurance is the one type of insurance that pays you a income stream when you can't work due to an accident or sickness.
Okay. And so who benefits from a disability policy? And I know that you concentrate mostly in the medical field, but tell us who benefits from these policies.
The policy is written on an individual person, a doctor, a nurse, a dentist, or business owner, attorney, engineer, a professional. And if they are sick or hurt and can't go into work, the carrier will write them a check based on the monthly benefit that they purchase. And the monthly benefit that they purchase is typically paid tax-free if the person pays the premium with after-tax dollars. If it's an employer-sponsored plan, the employer pays the premium, deducts it as a business expense, but the benefit's taxable. So the person that benefits is the person that has an individual disability income policy. That's really where I specialize. We do group insurance, group disability, long-term and short-term, and help with association plans. But my focus is really on the individual product. So it's the individual that purchases the plan that will receive the tax-free benefit.
Okay. And now, so that would segue into the next question. Why would somebody need disability insurance? And as it relates to our target audience of the 50 and over target market for Gracefully Graying, explain that if you would.
Okay. As I mentioned, disability provides income continuation during an accident or sickness that prevents you from working during your pre-retirement years. Gary's going to focus on post-retirement years in a moment. Disability income supplements reduced income to families that result from being out of work. Disability maintains your lifestyle by providing a guaranteed income stream for living expenses, regardless of the stock market or general economic conditions. Disability restores lost benefits from employer group long-term disability plans that typically discriminate against higher income earners. Disability income insulates retirement savings from erosion, especially when pension or profit-sharing plans additions cease during a disability. And disability preserves your confidence. As you imagine, getting injured and not working is very, very stressful. Mounting piles of bills are stressful. You can avoid this pain and embarrassment and instill a sense of confidence with a disability income paycheck. It pays you in the absence of your receiving a paycheck from your employer.
Right. Okay. And yeah, it's all just very important. And obviously people need to think about this and
Absolutely.
Be educated on this. So in this strange time of COVID-19, how has this affected your business?
COVID has changed the world, everybody, everything. It's shown us that we are expendable and vulnerable. This is the first time in over 30 years my clients have called me to say they had to close their practices for 2 or 3 months during the height of the COVID-19 virus and therefore did not receive an income or received a reduced income. They felt the pinch of the economy. It confirms that we should all have at least 3 to 6 months of an emergency fund set aside, which is virtually important to everyone's overall financial future. You've got to plan ahead and not be caught off guard.
Right.
I have clients that I started working with over 30 years ago. During their working careers, they realized that prioritizing their income was and continues to be crucial. They needed income provided for their entire career to maintain their lifestyle, and it needed to be sufficiently funded.
Yeah, you're right. This is a very unprecedented time, and
Totally.
Professionals, medical professionals are definitely running into that situation that they've never experienced before. So, remind us, who is the largest buyer of disability insurance in your practice?
The largest buyers of disability insurance, and this is true, and it's a fun fact, they're not athletes. They're not entertainers. They're not doctors. None of these. The largest buyers of disability insurance are floor traders on Wall Street.
Oh,
These are the millionaires who are looking to protect themselves and they want a guaranteed income stream. although they are brilliant investors, they realize they cannot guarantee the return on investment that a disability can provide. Savings are generally allocated to growth investments and may be illiquid if needed immediately during a disability. The stock market has already threatened the adequacy of retirement income savings, enhancing the need for disability protection. Later retirement ages forced by poor savings habit or equity results increased reliance upon a safe and continuous income stream. We always tell our clients, we hope this disability insurance policy will be the worst investment you ever make. But, if you need to use the coverage, it will pay you as the disabling event, if the disabling event is a legitimate claim. Disability income provides peace of mind. It is your safety belt. It is. So my clients that purchase disability insurance are protecting their pre-retirement income. And they often want to transition to similar post-retirement relief. So that's where I'm going to pass this conversation over to Gary, because he really does focus on the post-retirement side of income.
Right. So welcome, Gary. You've got a hard act to follow with your sister, Lisa. So tell us about your business, the name of your business, and go ahead. Explain yourself, Gary.
Let me follow your lead with Lisa and answer the question you asked her. What is it like to work with your sister? Mm-hmm. Actually, it's a lot of fun to work with my sister because she's very smart and confident in her knowledge and sincere and effective in developing ideas and answers that her clients need and want. She addresses young professionals' needs for career-long income protection. And I look upstream to the client's parents for lifetime liquidity needs. We pass the baton back and forth, as she mentioned, opening doors and sharing everything.
Okay, so tell us the name of your company and explain how you work.
Terrific. The name of my company is Advanced Income Strategies. It's not coincidence that our corporate names include the word income. Lisa's is Lifetime Income Sales Associate. Mine is Advanced Income Strategy. Wealth today is more than simply amassing appreciable assets. Now, that's not a simple task, but wealthy is experienced as lifestyle, in particular cash flow or income. With income, magical things can happen. Without it, it's almost impossible to be wealthy or enjoy any kind of sustainable lifestyle.
Okay, that all makes sense. So Lisa explained how she got into the business, and I know that your mother was involved in the aspect of the business. But tell us your background. How did you get into this?
My mother didn't have big feet, but she had big shoes to follow, and so I also followed her into the life insurance arena, becoming affiliated with Equitable Life at college in Ann Arbor. After graduating from the business school, I had an internship with the president of Equitable in New York. At that time, they were the third largest mutual company doing business in America and just beginning to venture into interest-sensitive product development. Interest rates were unusually high in the early 80s, and insurance companies needed to stop the bleed from distributions into higher yielding investments. Interest-sensitive products draped in tax benefits to compete with Wall Street were the new kid on the block and the expected cure. And we sold a lot of that stuff and enjoyed great success before a pension think tank invited me to become their life insurance team lead and move to Miami. My responsibility then was to design, illustrate, and define the process of selling incidental life insurance inside of qualified plans to high net worth financial and legal professionals. I lived in Miami and worked in Manhattan for 3 years. The firm enjoyed tremendous sales growth. Client lists read like who's who on Wall Street. Our plan design was very effective, ultimately the target of Congress and its Tax Reform Act of 1986. The new rules for pension plans were intended to eliminate our particular plan design. So just in time, I left the firm to form my own on Wall Street and take advantage of the great idea and time remaining to leverage tax deductions and life sales before the law changes became effective. A few years after that, I sold my firm, returned to Detroit, and joined my mother and sister's insurance practice. In the early 90s, just by way of a little history, markets were booming. Risk accounts were high and estate planning was in big demand. Distribution planning was front and center. Many professionals, especially docs, had large IRA balances and wanted to preserve the family asset into the next generation. Often this involved life insurance to pay the estate tax with external tax-free dollars, leveraging tax-deferred balances to pass to their children undiminished. Another sales surge, another law change. And in each instance, I recognized the unique features of life insurance made the purchase a very effective solution. But the ebbs and flows of demand, when driven by tax savings, were transitory, very smart and effective, but short-lived. And law changes were typically followed by funding changes, and certain life insurance policies didn't change well at all. Lisa and I wanted to find a purpose that was permanent, appeal to a broad spectrum of buyers, was risk and tax-free, and energized by the unique life insurance risk transfer. And a few years ago, we found it.
So how long have you been working together?
We've been working together for about 20 years.
Okay, so obviously it's been a while. So tell us what's unique about your practice, and especially as it pertains to the gracefully graying audience.
Excellent. We are seasoned problem solvers. We deliver durable answers. Part of the cure for our gracefully graying audience we are discussing today dates back about 40 plus years. Part dates back 24 years to the Health Insurance and Portability and Accountability Act, HIPAA. And the rest, our ebb and flow, the demand and need that we seek, is COVID current. In the early 80s, Congress changed the tax law to allow life insurance proceeds to be paid tax-free during the lifetime of an insured diagnosed with a terminal illness and expected to die in the near term. This opened the door. There's no string attached to how this money is used, whether to fund medical treatment or experimental cures, bucket list items, perhaps a family trip with loved ones. And once enacted, it has been well maintained, has become more lenient in the last 40 years, appears to a very broad constituency, and likely to survive the test of time, one of the features that we were looking for. Then, in 1996, some 24 years ago with HIPAA, Congress acknowledged a very significant financial need exists for those who develop a chronic illness that limits their ability to care for themselves. A person is considered to be disabled if they have been certified by a licensed healthcare professional as being unable to perform without substantial assistance from another individual at least 2 activities of daily living: bathing, continence, dressing, eating, toileting, transferring, for a period of 90 days due to loss of functional capacity, or requiring substantial supervision to protect such individual from threats to health and safety due to severe cognitive impairment.
So, Gary, hold on. I have to ask you about that, because when people face these issues, it's probably more than 2 of those that you mentioned. It's probably a whole handful of those, correct?
Yes, that's exactly right. And that's usually the trigger that lets us all know, especially the family and the attending physicians and to those closest to the affected person, that something has changed and needs to be addressed. Satisfying this threshold of the triggering events as a result of the law change allows the insured to receive from an insurance company up to $160 a day tax-free, regardless of how it's used. Adjusted for inflation, this HIPAA per diem, as it's called, has grown from $160 in 1996 to $380 a day, or $11,400 a month tax-free in calendar 2020. That's a lot of income. It's tax-free. And this is part of the answer in response to the need for care to fund it with tax preferences and certainty that have been baked into the law for a long time. In large part, these ADLs, these activities of daily living, are things we completely take for granted. Until they strike, we miss them altogether. They're generally the first things we do the first 15 minutes of every day. And they don't require a catastrophic accident or illness to be compromised. Simply orthopedic limitations. Perhaps they're caused by memory loss or forgetting to take blood pressure or other sensitive medications. Identified by their doctor, these limitations occur naturally as we age, despite best efforts, even when gracefully graying. Many people believe that Medicare and Medicare supplement insurance covers these expenses, the costs of responding to those needs. But that's only true for the first 100 or so days following certain hospital stays, regardless of where the care is received, at home, in a rehab facility, skilled nursing, or hospice.
And I'm sorry, I'm gonna interrupt again. Would you say then that, when circumstances happen to patients, elderly patients, with their, daily living activities, that what percentage is it? And I would probably think that it's a high percent that the kids, in their 50s or 60s would be getting a hold of you, or maybe already have gotten a hold of you and say, hey, this is what's going on. And obviously you have to think about this before it happens, but give us your demographics, like who's.
Absolutely, thank you. That's a perfect segue into some additional notes that we have. In fact, we'd like the kids and those that recognize the triggering events to come forward and alert us, seek guidance before they become baked into the physician's notes, and care is immediately needed. The lion's share of out-of-pocket costs are uninsured or self-insured through family savings, and that's the problem. And it is bigger than any healthcare financial crisis experienced in our country. And the problem is only getting bigger, and everyone knows it, and no one knows what to do about it. Recent HHS studies identified that over 65% of those over age 65, 2/3 of the population in excess of 65 will need some kind of long-term care during their lifetime. Over 75% of those who receive care will receive it at home. 80% of the caregivers are relatives. 70% of them are female. And most of these female caregivers also work outside of the home. And those are the statistics today. 20 years from now, HHS projects that there will be more females in the workplace, fewer adult children living near their older parents, increased demand and reduced supply of traditional caregivers, raising the cost for longer care durations, amplifying the problem exponentially.
Yeah, I mean, it's basically setting up a perfect storm. I mean, of what's going to happen in the next 5, 10, 15, 20 years. I would think that it's going to get worse and worse. And unless people address it earlier, it could be very problematic and wipe out families, I would think.
It will wipe out savings, substantial savings, in the blink of an eye. The problem is not going away. And COVID reminds us that it may not be solved by increasing savings and brokerage accounts, because investment balances are volatile. They're affected by circumstance beyond any investor's control, much like the economy, tax policy, and in particular, the timing of when a care distribution is needed. An individual's independence and dignity seldom waits for stock market recoveries. Instead, unexpected costs may require a distribution from savings in a down market and further jeopardize the sufficiency of their retirement savings. For many of us, the recent COVID stay-at-home orders were the first time we experienced the impact of immobility. We wanted to get out and live our lives, but we couldn't. Imagine how much more difficult that situation is for those who are sick or have additional care needs. Not only do they have limited access, but they also require others to assist them. Let's take, for example, just parents with school-age children. When kids don't go to school, someone else stays home, perhaps to assist with remote learning, maybe not. In either event, while away from work, they incur opportunity costs from lost wages, much like the sacrifice they make when caring for a loved one, which so many will do now and in the future. Few believe that doing more in less time, doubling up and working overtime, is a viable long-term solution. COVID reminds us that guaranteed income contracts are worth their weight in gold. One of the greatest impacts COVID has had on the insurance industry is not an acceleration of mortality claims. Obviously, there have been claims paid related to the pandemic. Future underwriting practices will be tightened for sure. But much larger consequences on the product pricing and reserve strain, a direct result of extended duration of near zero treasury yields. Life insurance companies make long-term promises. Regulations require they adequately fund them with riskless asset reserves. And the lower yields on these safe assets requires larger funding, ultimately reducing the amount in the general account to operate insurance company home office operations and their dividend payments. The industry remains strong. The best carriers remain safe and secure as a whole. They're among the largest and trusted money managers in the world. But COVID teaches us, all of us, how precipitous changes to the economy can impact our daily life, how government response to managing a crisis could impact employment security, cash flow, likely future tax policy changes needed to manage the unexpected increase in the national debt. Plus, the aggregate impact we feel domestically is felt by all nations around the world. All reasons why we need a more reliable, tax-free performance guarantee to fund the expected chronic illness needs of aging.
Yeah, this whole issue obviously goes beyond the insurance and the life insurance and disability, but it's a global problem. It's an economic problem, an all-encompassing problem. So if we were to just summarize or give advice for the 50 and over crowd, each of you, maybe Lisa, you go first quickly. What would you suggest to people and their families as far as what they could do proactively to, take care of their situations? And what do you suggest?
Well, I would suggest absolutely having a disability income policy that provides this guaranteed income stream if you become sick or hurt and can't work. The most important thing that I like to educate an individual on is to look at the policies. There are a lot of carriers that offer disability insurance, but you got to look at the specimen policy and look at the wording for the definition of total disability. You want to make sure that you are covered in your specialized area so that if you can't do your job and you can do something else, you still get paid. So I always review contracts with individuals, showing them what the definition states, not telling them, but showing them so that they can see it and they can make an educated decision based on the presentation that we walk through. I'm a broker, so I work with a lot of different companies, and I'm licensed in 37 states. So it's really important that the person knows exactly what they're purchasing before they make the purchase. And disability insurance has paid many of my clients, and they are very, very, very grateful because they realize that if they didn't have the coverage and their income stopped, it would be a severe financial, it would have severe financial impact on their lifestyle.
Yeah. Okay. Gary, we've got a few seconds left. Your words of advice to the Gracefully Graying crowd.
We recommend not to rely on investment savings, perhaps not to rely on traditional long-term care product as the end game and the solution, but rather explore further this notion of edible term arrangements. You'll be reading more about it soon because the tax law anticipated this problem. People are outliving their retirement savings, and if isolated assets or earmarked assets are not set aside and protected to fund the anticipated costs of aging, it's just another insult to your investment portfolio, and it could have devastating impact on the loved ones around you. Right. There are tax benefits baked into the law that are very sound and true, and we think that they offer an answer to this looming problem.
Great. Thank you to brother and sister team for sharing your insight and your knowledge in your respected expertise. And Gracefully Graying crowd and audience, we hope that you enjoyed this. Please like us and share us on YouTube and all over our social media, gracefullygraying.com. And we look forward to seeing you again. Thank you, Gary and Lisa.
Thank you, Lori.
Thank you for having us.